traders, this is Blake Morrow. You were listening to the Morning Edge webinar, so I want to welcome you all back. Happy Friday to TGIF. I don't know if I had an opportunity to say that to you just yet, but TGIF. All right, so let's go into the currency market or currency market. Of course, we're going to go in the currency market. Let's go into the euro dollar and talk about it really quick. You know, I know some of you are going to be trading it regardless. You know, and in trading some of these extremes, like Paul Franco, you know, great call. He said 112.10 was a really key resistance here. Excuse me. We were getting sorry about that. I had a couple of drinks with my wife last night. My kids got invited to stay the night over at some friends' house, and so my wife and I were like, "Well, we have no kids. Kids are gone. Let's go grab a drink." So we did that. And yes, for those of you kindergarten cops out there last night that were tweeting me saying, "Boy, get home. You know, don't drink too much, and you know, get home early." Bob, wherever you are, and you know, Eric and everybody else out there that was tweeting at me last night. I was still in bed within a half an hour of the time that I normally go to bed, so it was no big deal. But anyway, the I guess the point I was trying to make about that is with it in regards to the euro, or in regards to the markets. You want to be trading some of these extremes, but unless you're trading some of these extremes, you probably don't want to, you know, fool around too much in these markets. Not right now. There's going to be plenty of opportunities. I think all the opportunities for me are really going to be after the weekend. You know, I'm looking at post. Hopefully, there's a Greek deal over the weekend. Following some sort of Greek deal, then I'm going to be looking for a fade in the euro dollar. And you know what Steve Bealby pointed out, it may be up here at 114 or 113 and change. Yeah, I mean, these are going to be great resistance levels to play into. I do believe that when you're dealing with the euro, you know, if Greece stays in the eurozone, that's, to me, it's just more of a layup of being on the short side. You know, because that central bank divergence between the ECB staying low for longer and the FOMC looking to raise rates in September, because you have to imagine, if this Greek deal does get signed this weekend and then we can get past it, which looks like, you know, there's a good shot at being the case. You know, I would say more than 50%, but you know, probably a good shot of some deal getting done. What we're going to be facing is the harsh reality that the ECB will keep rates low for a long time, and the Fed will say, "Good, we're past the Greek saga. China is China," because China, in 2 months from now, Chinese markets will be nice and stable. The Fed will be looking to raise rates because they have to, because they want to. And they're looking for reasons not to. They're looking for reasons not to, and those reasons will be past them. So at that point, when the market realizes that, that's when the euro will come back down. And I suspect that'll be probably Monday or Tuesday. So let the market cheer. Let them celebrate. Let them rip the euro higher. Let it squeeze the market. And then once it's done, you know, we're going to look for some good reversals on Monday or Tuesday. That's the way I'm going to approach it. I'm hoping there's going to be I hope there's a Greek deal this weekend, because I want to short the euro up here at 114. I want to short it at 115. I want to short it somewhere higher. Now, that doesn't necessarily mean and guarantee that's where it's going either. We could get the complete polar opposite happen. Greek deal gets done, the euro opens below 109, perversely. Greek deal gets done, the euro craps the bed because people have been buying the euro thinking that the euro is going to be stronger without Greece. It could happen. I don't think it's going to happen that way, but it could happen. All right? Anything can really happen. But all I know is once we get past this Greek deal, I am then actively looking to short the euro, regardless of where it's at. I hope that makes sense. Okay, for today though, that's Monday, Tuesday into next week. For today, let's talk about where we're at. Let's take this entire range of the euro dollar. So when I say range, talking about the upper end of the range is around 114, lower end of the range that we've posted this week that or last week that comes in around 109. We're basically mid-range. You can see that we are at the 50% retracement right here. How many times have you all heard me say this? Especially my normal listeners over the last, 5, 10 years that listen to this broadcast that long. How many of you guys and gals have heard me say this, that before a big news event, before a, interest rate decision, jobs report, where do we usually end up before a big news event in the market? Where do we end up? Greg and Amanda, two of my listeners in the UK have answered. That's right, smack dab in the middle of the range. You know why? Because it screws everybody. It finds a midpoint between a key resistance and a key support, because the market becomes neutral. There's a big event happening in Greece over the weekend, if you didn't hear. They're probably going to patch a deal together, or we're going to start formal steps to removing Greece from the eurozone. One of the two things is going to happen over the weekend. I think everybody understands now that that at this stage, because Greece is in arrears with the IMF and there's more payments due that they're not going to be able to make, it's either you put together a deal this weekend, and if not, we start the formal, probably very long and tedious and painful process of removing Greece from the eurozone. One of the two things is going to happen. Well, with that being said, the upper end of the range is around 114, the lower end of the range is around 109, and we happen to be smack dab in the middle, because no one knows what the hell is going to happen over the weekend. I sure as hell don't know what's going to happen over the weekend. You guys can make your best guesses, and I can make a guess, but I don't know what's going to happen over the weekend. But I suspect a positive Greek deal, we're ripping up to here. Without a Greek deal, we're going down here and probably going to go a lot further. Okay, so we happen to be mid-range right now, and so expect that from here you're going to get stiff resistance anywhere from here. So let's think about that for a second. If the euro rallies to the 618, that's at 112.37. Okay, I imagine that's going to be probably very good resistance today. If you are an intraday trader and you want to try to scalp the euro on the short side at 111 or 112.35 or 37, you can write, I think that's going to be good resistance. All right. Now, if you want to be on the long side of the euro, you're like, man, they're gonna patch something together. I just want to buy dips here. Fine, buy dips, but buy dips out here at the breakout point. Don't buy them right now. Buy a dip here. So this is how I would trade the euro today if I was tempted to trade it, which I'm not going to be. So you can just forget about it. I'm now sidelined. I made my money that I needed to make overnight in the euro. I'm done with it. But for those of you that want to trade it, I think you buy dips down to 111.30, because you can see spike high, spike high, spike high. See those? Okay. Get rid of them. A little. And then you get a spike up to 112.30. Short it. For you intraday traders, that's going to be your best risk reward, my opinion. Okay. So support down here is 111.30. And I know it sucks because I know a lot of you right now are like, oh, Blake was long those euro pairs overnight. I missed those. Maybe I didn't trade the yen pairs to the short side this week. I didn't make any money doing that. I really want to take advantage. I want to trade today. I want to do something. I want to make some money. Guys, remember, you're paid to wait for the right trade. If you missed some opportunities last night, because you weren't around. It, I just happened to be, like I said, I was fortunate that I happened to be in front of the computer yesterday afternoon at 5:45 p.m. Eastern. I will tell you I was very fortunate for being in front of the computer at that moment and being able to react when I did. But there was not a lot of people in front of the computer that at that time, you know, just realistically, there wasn't. It was a big changeover between North American and Asian traders. Europeans were probably dead asleep. It was tough to be in front of the computer at that point. The temptation right now is I just want to do something. I want to make some money, but that's not the right decision when you've got the euro that is probably between intraday mid ranges, and you're at a 50% retracement of the last month's worth of movements. So unless we get to 111.30 or unless we get up to 112.30, I think trading the euro is going to be a little difficult. Okay, don't. This is a very easy day to get turned upside down. All right. So here's the cable. So the pound bounced off really key support yesterday. Oh my God, I think Rich. I remember him saying yesterday he was getting long down here, and I'm like, God, be careful. But we really bounced off a critical support. Very, very, very much did. Um, we had divergent relative strength that pushed us lower, and that's why that support right there was very critical that we held it. Now, the cable ripped up higher, and I don't even think there was any data out in the pound. But what we did is we actually pushed a previous support. It's acting as current resistance. Check it out. Previous support, current resistance. You see it? Okay. Now, let's remove this fib here. And let's remove that for now. That was a 38% retracement. That is a key resistance. If you want to be on the short side of the cable, that's your risk. 155.50. Period. End of story. 155.50. That's the risk. Okay. Throughout this week we've been in a bearish trend because we've been basically in free fall mode. But now that we've recovered from that support, I'm going to put us back in a range. Okay. Range environment. But the cable's at risk. The cable's at risk because if let's say Greece puts together a deal with the EU, an agreement is made, the pound is actually susceptible to a pullback. Why? Because the euro pound will probably squeeze higher. My 2 cents is this euro pound that's been beat up for so long, okay, is going to start a recovery back up to like 75 pence or so. That's 300 pips in the euro pound. That could put a real big damper on the cable bullishness that we've seen as of the last few weeks, or last few months. The cable could really roll over and see some downside pressure if the euro pound starts to recover. Okay, just some food for thought with you guys. Now, support for the cable today. Look at this, by the way, look at this shooting star on the hourly. That's going to be a pretty ugly candle that will probably result in some downside pressure here, So I know I just deleted that, which I shouldn't have. So any dip down to this support is probably going to be bought here. 150 was it 154.15? But yeah, watch that reversal candle. That's a nasty one. That looks ugly, doesn't it? We only have 10 minutes before that candle closes. That candle closes anywhere down here, and that thing's probably going to see a little bit of a sell-off. 154.15. All right, let's go to the Swissy. So Swissy got hit hard. I mean, that's telling you one of two things with the Swissy. Either no one really believes this deal's getting done, or maybe it was just maybe perhaps you have the Swiss National Bank that have been intervening that probably said, okay, we don't have to intervene anymore, and maybe you got some liquidation there. I I'm telling you right now, and I'll reiterate this next week on Monday or Tuesday, especially if a deal gets done. If a deal gets done in Greece, okay, I'm going to get long Swiss pairs. So Euro Swiss, Pound Swiss, Dollar Swiss. I'm shorting Swiss franc basically, is what I'm trying to tell you. So yeah, I don't know. I can't really explain the strength at the moment, but the a deal has not been done either. So keep that in mind. We're at 127% extension thus far. Man, that shakeout right there. 93.35. So the spike low is down to 93, 93 and a quarter. That should be a pretty good support for today. But see that 127% extension of that that move. 93.25. Resistance on rallies will be up to 93.75. So a lot of volatility there. I didn't expect that much volatility overnight. I really didn't. Okay. Um, let's take a look at the yen. So the yen, I am not. I have no yen exposure after last night, and I got out of the dollar yen right here at 121.47, 48. That's where I cleared out of my yen, dollar yen short overnight. Now, let's take a closer look at this dollar yen because we are back above 122, but we should be facing some pretty good resistance. Not today, but 123 is going to offer us some resistance up there. Hold on. 123 is going to be a 786 retracement. So imagine over the weekend, Greece deal gets done, dollar yen spikes up to 123. I'm going to be shorting it up there. So just letting you all know that. 123. I'll be shorting it on Monday, I think. So we were in a bearish, thought we were going to start developing a bearish trend as we went below the that yellow trend line. But see, we may shoot. I don't know. We're retesting it right now. Hmm. Okay. Today's 618. Let me stop for a second. The 618 right here is at 122.50. So I'm going to put that in there as well. 122.50. I, I'm not trading it today. I'll just reiterate. I hope that a deal gets done over the weekend. We spike up to 123, and I'm going to sell some. I'm going to sell some dollar yen up at 123. Okay, on Monday or Tuesday, or maybe even Sunday night. But that's what I'm looking to do. Okay, support. Hmm. I spy with my little eye an ascending wedge. I don't know about you guys, but I spy with my little eye an hourly ascending wedge that it's got a You know, pay attention to that. So, when's the last time you played I Spy with your kids? For me, it's been a few years. I'm just saying. Hold on one second. Okay, had to blow my nose. Good morning, Mike. How are you doing out there in California? Good to hear you. See ya this morning. Uh, Patrick says, "Laugh out loud." I spy with my little eye. I love that game. I know, isn't that fun? So much fun when you're on road trips because you can't. You know, Americans remember this. Well, when I was a kid, we used to play slug bug. So whenever we see a Volkswagen bug or beetle, we'd hit each other as hard as we could when we were in the back of our parents' car. But you can't really do that on road trips anymore because Volkswagens aren't very popular, and all the '70s Volkswagens are broken, so they're all broken down, so you don't see them on the roads anymore when you're traveling. So now you have to do this I Spy game with your kids. It's the only game you can really do when you're on road trips. Okay, it's a fun game though. Support for the dollar yen. I think we're still making higher highs and higher lows, especially intraday. So that means that intraday, watch the 122, what is that? 122.10 level. Okay. Should hold. As long as risk is holding up, that should hold. Risk appetite. Um, okay. When I come back, we're going to do the Canadian, Aussie, Kiwi, dollar index, and then we're going to get ready for the Canadian jobs report. So don't go anywhere. Folks, thanks everybody for being here. I'll be back in a few moments. All right, traders, this is Blake Morrow. You are listening to the Morning Edge webinar. I want to welcome you all back. I hope everybody's having a great trading session. And let's go and cruise through the Canadian, um, Kiwi, Aussie, dollar index and get those out of the way. The Norwegian krone is extremely strong too. I believe, there was some inflation data overnight. Let me go grab the. Crap. Hold on. But you can see the Norwegian krona is down 1,500 pips. I think there was let me yeah, inflation data. There was inflation data overnight. It came in a little firmer than the market was expecting, and so that 2.6% versus 2.1% what people were looking at for CPI. So that actually produced a pretty big down move, in relation to the euro up move as well. All right, so let's take a look at what what we've got going on with the Canadian. Now, Canadian, obviously, Canada had a huge blowout jobs report on last month. They created 50 some thousand jobs. Let me go back and double check what that number was. It was 56,000 jobs, if I'm not mistaken. And 56,000 jobs is, it's the equivalent of like here in the United States of posting about 300,000 jobs. It was 59,000 actually. So it was a huge number. But this month, the market's expecting, they were looking at that more as an anomaly. And so we're looking at Canada, in fact, actually losing probably about 10,000 jobs this month. And people are also expecting the unemployment rate to tick up from 6.8 to 6.9%. So with that being said, the Canadian is at risk of, if the number comes in weaker than expected, it's at risk of going higher. Now, I got asked, oops, shoot, that's not what I wanted to do. I got asked by Stephen uh, S. He asked, "Hey Blake, while the dollar Canadian's up against key resistance, why won't you just take profits here?" Now I'm gonna stop really quick, and I want to talk about this Canadian, which now happens to be the only position I'm in right now is the dollar Canadian. So I'm gonna ask you this: why do you think I'm gonna stay long the dollar Canadian right now? For those of you that have been listening in, maybe for the last couple of weeks, you can answer that. But do you think that the dollar Canadian's at key resistance right now? Do you think it is? Yeah, my target is 140. That's correct. That's one of the reasons why I'm not getting out. But I don't think we're at key resistance. I mean, we're the key resistance comes in at 128.25, and we're 100 pips away from there right now. But that's 100 pips away. You know, when we if we rally another 100 pips, then I'll start getting worried about being at key resistance. But I think we're above the 786, and we're consolidating this most recent run. Look at look at the price action of the Canadian right now. Actually, you know what? Let me just do this really quick. I'm going to delete everything and I'm going to redraw it, since this is obviously a very important currency pair today because of the Canadian data surrounding, what we're doing here. As you guys know, I'm trading this. This is the chart I'm actually trading, right? I'm trading, I'm trading basically crap, not that. I'm basically trading that. That's what I'm trading right now, longer term. Okay, something looks like that. But if you look at the price action, this is the daily chart. So let's go to a 4 hour. Look at how bullish this Canadian is right now. What do I mean by bullish? Look at this. Look at this consolidation. Tell me that things. Okay, people have been buying this Canadian, and they're no matter what happens with the euro, no matter what happens with the dollar, they're buying the Canadian. Do you see that? There you go, Patrick H. You said it perfectly. Perfect analysis. Shallow retracement is very bullish. That's right. If okay, I'm gonna I'm gonna leave it at a blank gray screen here. I'm gonna teach you guys a little something about trading for those of you that have never heard this before. So when you're trading the markets, okay, usually the markets have an ebb and flow, right? Ebb and flow, ebb and flow, ebb and flow. Grinding higher or grinding lower. You can do it opposite. When you have a move and you have a shallow retracement, so you go 38%, you know, 38%, right? 50. Trying to do this with the mouse, it's hard. 50, 618, 786, right? Whenever you have a shallow retracement, that means the next move is probably going to be pretty damn powerful. Okay. Once you get down to like a 618, that's where you get this, grinding cessation, but it's still trending higher. You get a 786, then it's usually likely that you're going to start seeing a reversal. So, again, shallow retracements mean explosive moves, get a little deeper, then you don't move as much, then you get real deep, and then you start to reverse. Okay, that's usually how trends work, right? So, with that being said, this move right here, I mean, look at it. We move from what you can go from 121, 123 to 127, 128. We're just consolidating. Now, that doesn't mean that we're going to have a great jobs report out of Canada. But what that also means is even if it's a great jobs report, or that, I'm sorry, let me rephrase that. That doesn't mean we're going to have a poor jobs report out of Canada and bust higher. But even if we have a great jobs report in Canada, let's say Canada creates 10,000 jobs. We were supposed to lose 10,000, but we created 10,000. I still feel that the Canadian is going to have a very shallow pullback. Like the pullback won't be too deep. I mean, we may pull back to 125, 50, 125, 70. We may, but still it's shallow in respect to what's the price action's been showing you. Okay. So do you see it? Malcolm asked, buying Canadian or the US dollar? The US dollar versus the Canadian. I'm long the dollar Canadian. I'm long the US dollar versus the Canadian dollar. I own it at 124.80. But I got asked from Steven a little earlier, said, well, why, wouldn't you exit your position knowing that you're up against resistance? Because you also have to realize I'm not in a full size position. I'm actually looking to add to my dollar Canadian. Okay. We break above 128.30, I'm adding. Then we break above 131, I'm adding even more. We break above 131, I'm adding more. So I'll buy some more at 128 and I'll buy more at 131 as I target 140 eventually. So if you guys want to know how I'm trading the dollar Canadian, that's how I'm trading it. So I'm already in a position and I'm nestled in a really nice position up 220 pips and I'm sitting in it. But I'm about ready to go larger on any move higher, if that makes sense to you. Okay? All right. This is a weekly chart. You can see this is over a decade's worth of data that I'm showing you right now. But notice, I'm going to go back to the 4-hour chart. Notice how bullish the Canadian is. It doesn't matter. You apply dollar weakness like you saw last night. The euro dollar rallied 170 pips. The dollar Canadian moved 10. Let me say that again. The euro dollar rallied 170 pips. The dollar Canadian moved down 10. That tells you that people are buying the dollar, or people are selling Canadian currency right now. A lot of that has to do with the weakness in crude oil, because crude's probably going back into the 40s. A lot of that has to do with the Canadian economy and how people feel the housing market's probably going to collapse. How the Canadian economy is going to suffer with weak oil prices for years to come. There's a lot of reasons why people are selling Canadian currency. All right, and I think the dollar Canadian is going a lot higher than where it currently is. That doesn't necessarily mean it's going to do it today, but I'm thinking over the course of the next couple of months. So today, any dip today down to 126.30 is going to be very well supported, even on a strong Canadian jobs number. Okay. If we get down to 126.30, I might actually buy some more. So that's support. 1.2630. Resistance right now is 127.75. That's key resistance, 127.75. Okay, and it is bullish. Kiwi. So it's so trying. It's so trying to squeeze. Look at it. Look at just. I'm telling you guys, let the Kiwi squeeze here. Dave says, Blake, you had me at hello. Don't take that wrong. I'm thinking you're kind of strange, Dave. I love that movie. Jerry Maguire, one of my all-time favorites. All right. So here's the Kiwi from yesterday. Look, we knocking our head up against resistance. We had that all written out yesterday. Even this bullish news out of the Eurozone, and you have futures that are up over 1% in the U.S. markets. You have futures you have Asian equity markets like the Shanghai up over 4%. You have European markets that are up 2.5%. The Kiwi can't get out of its own way. What does that tell you about the New Zealand dollar? It is a big, old, fat, smelly piece of garbage right now. It really is. So you thought I was going to say something different, didn't you? Right now, if we get a rally above 67.70, great. We get up to 60. This trade is still in play for me next week. So I'm just going to move this over. I'm going to do this. And let me get rid of that one. Do it here. Like that. So Heaven forbid we get up to 68.50 today, because I will be shorting that currency pair. But we might. 67.70 is resistance and support is 67. So, and we are in a bearish trend. So don't don't misunderstand me that it may get a little squeeze, but we are in a bearish trend in the Kiwi. No if and or buts about it. We have to get over that yellow line for me to even think about the Kiwi not being bearish. Okay, still a very bearish trend. Aussie. I bought this last night and I sold it. I made 26 pips. Kind of happy about that. The Aussie. Now, I originally had this drawn from yesterday. I had it drawn like this, so I think I just had it misdrawn. I had it drawn like that last night, but I think this is probably more accurate here based on the price action overnight, right? Looks something like that. 74.45. 75. Okay, we got a triangle building here. So 74.45. 0.75 amount. It is in a bearish trend, but it's trying to turn. It is so desperately trying. Whoops. It is so trying to turn, but we are in a very, very bearish trend. I had this one guy who I am fully 100% convinced that he bought all of his followers on Twitter. I said, I'm buying the Aussie dollar, and he said, well, it's about time. I'm like, what do you mean it's about time? I've had absolutely 100% no reason to buy the Aussie dollar at all. Like, none. Like, this thing's been in a straight up bearish trend since it was at 108, 110. I mean, there's been no reason to buy it. Now, we are starting to see some divergence in relative strength here, and I was hoping with a bounce in Chinese equities and a bounce in risk appetite overnight, being that the Dow futures are up 170 points, 180 points, I was thinking that the Aussie might at least bounce, but it can't even bounce. That makes it bearish. So I don't know. Okay, dollar index. Okay, here's the dollar index. Dollar index is under a little bit of pressure thanks to the euro rally. So we did fall through the support. And this dollar index is just a bit of a disaster at the moment. Support today, we are sitting really on it because you can see right through here. Spike high, spike high. I mean, we're literally sitting on support right now on the dollar. We're literally sitting on support, but more support at 94.75. We're obviously range bound in the dollar index. Key resistance is at 97.25. Oops. And we're in a range. Okay, guys, we have 12 minutes before the Canadian jobs report. I'm going to leave the bias chart just like that as it is. Here, go ahead and take a picture of it.